Yeah, that's actually really good. That's kind of one of the things I wanted to hit on too. Like people don't need to trade every day. You know,
Yeah.
like they
Yeah,
have
I
to
hear
be
you.
patient for that opportunity. And like you said too, you know how Peloton moves. So it's good that we focus on what we know. You know, I feel
Mm-hmm.
like a lot of what's causing people to lose is that they're trying to play too much. You know what I mean? They're trying to beat the whole entire market, and you can't do that. You know, but
Yeah.
if I know how Apple moves, or if I know how Microsoft moves, or Alibaba or G, if those are my stocks,
Then those
that's
are your
what I'm gonna
stocks.
trade. You feel me?
Mm-hmm.
And that's why I really try to make these less about what I'm trading and more so about what you all are focusing on, right?
Got you.
Because if you know how Peloton moves, you can trade it up and down. You know, you can know
Exactly.
that, oh, when it hits this price, I know it's going to reverse, right? And when it
Yeah.
comes this low, I know it's a buy. You know what I mean? So we can't play the whole market. Like, I mean, you'd have to be a genius to
Yeah.
keep up with all the prices, but the charting helps as well, right? So
Yes,
I
sir.
always, if I'm not trading, I'm charting. You know what I mean? Because
See,
I want to.
I never was like that. Like if I'm not trading, I just like leave and I just go away. And then I'm like, I come back and then I try to look for something. I'm like, but like I said, as soon as that was, I think the first day I'd start your class, I was like, man, I need to start charting more. Like I don't chart, I don't
Yeah,
chart, I don't chart my shit. Like I'll just go in there, I look at the ATR, look at the chart. I will even
yeah,
look at the options. I'll probably look at the options volume, and based off
yeah,
like those 3-4 things, I'll be like, it's time to trade. As opposed to now, it's like, bruh, like you're gonna trade this, you need to like chart it first so you know where
yeah,
to get in, you know where to get out. Because if you're just trading like I call it blind trading. If you're just trading blind
yeah,
where you don't know where to exit and where to come in, it's like, bro, you're just pretty much just
yeah,
gambling. I'm like,
yeah.
I don't want to gamble anymore.
No, man. And that's what's important. Like, you know, one of the best tools I use is bar chart the most active, right? So when I come in here, I
Uh-huh.
look at all of these and I'm gonna chart them. You know, I might not trade Intel, but I'm gonna chart it.
Yeah,
So if any day
got
I
you.
get an alert that says the Intel fell 10%, I'm gonna try to see if it's near that line that I charted. And if it is,
Got
I'm
you.
gonna trade Intel, you know. But like we have to come in and if you're not trading, and even it's best to step away from trading and get back to charting, right? Because like
Uh-huh.
you said, if you're not charting, you're trading blindly. You're just basically
Mm-hmm.
gambling. And then you get sort of that the greed sets in when you actually start making profits and you're not even sure of where to exit, right? You don't even know where the price is going to reverse after you've actually gotten your profits. And what happens is people will lose all the money they made. And it's
Yeah.
like, dang, gee, if you would have just charted, you could have found an entry and an exit, right?
I'm
So
telling
it's
you,
so
yep.
crucial that we chart these. But just in terms of somebody kind of gave me a quick rundown of naked calls and naked puts as like an
Uh-huh.
income strategy.
Uh-huh.
So I kind of wanted to go over that today. I don't necessarily trade naked anything because the loss is almost unlimited, right? I mean, essentially, if
It's
this
on you.
goes, yeah, if this, because you don't own any, naked means that you don't own the stocks. You're basically just trying to take advantage of the premium, right? So with naked puts, this is a bullish strategy for income. Okay. So this is where you would come to see where people are actually putting their money and they're willing to lose it. Okay. But they're also betting it'll go up. So you can see is AMC, Mara, you know, like it's things that have obviously fallen, but people are expecting them to go back up. So I don't trade naked anything. Okay. Like literally, if like I said, if this goes against you,
You
you'll
own
end up
lot.
having to buy 100 shares. There's no question
Yes,
about it.
exactly. Yep.
So I always, you know, I'm always buying and not selling because the naked puts, what they're doing is they're selling these contracts. Now,
Mm-hmm.
if the contract works on their behalf, like let's take a look at some of these options. But
Get to
I,
keep the premium.
yeah, you get to keep the premium. So if you, let's say, you know, well, AMC in this case, right? AMC
Mm-hmm.
falls down. All right. So basically, people are saying that, all right, I want to buy this strike price right here because I feel like it won't go back down below this. Okay. So when you look at the strike price on naked puts, these are essentially the prices people have bet on for those particular stocks. Okay. Now, what this means is that if the price falls below 35 on this AMC put, a naked put, that means that they'll have to actually buy 100 shares at this strike price. Okay.
Yeah.
And therefore at a loss. Right. So, I mean, because
Yep.
you're basically having to buy this strike price, even though the price may have fallen. So that's how you lose on these things. But in the case that they purchase this naked put, this basically means that if this price goes up and continues to go up by the expiration, I don't know if they put, they put the expiration. So basically this person or these people in general, because it looks like it's a 510 contract sold of this, or sold. So they're selling this put with the expectation that they can get $830 by September. Okay. So if AMC continues to go up, they get this premium. All right.
Mm-hmm.
Now, essentially what this allows them to do is literally make money without anything down. Okay.
Yeah.
Now, I do believe it credits your account. Like it'll have you negative whatever the premium is.
Yep.
So it will like deduct your account. So it's basically like you have to have the cash value in your account to actually trade these. Yeah.
Unless you do I think, is it a credit or debit spread? And then
and then they lend it to you.
Yeah.
You know what I mean?
Got you.
So essentially, you know, if this works out by September 17th, you'll get whatever the premium is. So I'll kind of take a look at something, let's say, and then there's also selling naked calls. I don't see people doing that too often.
It's pretty much the, like you just said with the naked puts, like you're expecting it not to get to like go past a certain price and stay at a certain range. And then once it goes up that price, you pretty much have to buy those shares at a, I've heard a lot of bad stories about,
you know, I don't want any part in that, right? Because essentially, let's say somebody went and sold a naked call on Apple. Okay, what they're betting is that Apple's price will continue to fall per the expiration date that they purchased. Okay, so if they sold a call option, you know, for whatever date, then Apple has to stay below whatever their strike price is in order for them to win. So if they came in and was like, I'm going to sell an options, a call option, a naked call at 148 or 150 maybe, because a lot of times what you do is you buy out of the money on naked options. So let's say they bought a 150 naked or sold a naked call for Apple at 150. Okay. So let's actually look down here and let's say they did it for August 20th, right? And they're expecting Apple to fall. Why can't I click on this? What's going on? Oh, am I not logged in? What's going on? Let me switch to individual. Okay, let's see what we got here. Okay, there we go. All right, so let's say they came in and bought for August 20th. Nobody would do this because the premium's only $350, and that's a very small gain.
Yeah.
Right? But let's say they did it and was like, hey, I want to buy this call premium for this. And so long as Apple stays below 150 by August 20th, they get this premium, right? Yeah. So you won't see, I've never really heard too much about naked calls being traded, but in the case that let's look at AMC, right? So AMC fell. All right. So essentially what these people that are buying these particular options at 28, 35, like this person's probably the safest at 28, right? But this person's got quite a bit of risk considering that we're at 36.99. But what that person is willing to bet on is that AMC will not fall below this 35, right? And if it does, they're going to end up having to buy shares and they have to exercise that. Okay. Yeah. So essentially, you only want to do the naked put strategy if you feel as if this thing has bottomed out, right? So when Apple fell to 115 back in, I feel it was March or May or something. Yeah, let's take a look at when it fell. Because I remember going to just buy some calls and I made some money off of that. Let's see. So when Apple fell down here, let's see, right here is about when it fell. Yeah, it got as low as 115 over here. So on this date of March 5th, everybody could have went and bought some naked or sold naked puts. Okay, because essentially with this being so low, the premium is higher. Okay. So essentially these people are saying that I'm willing to sell a put here in order to literally keep all the premium that added up as this fell. Okay. So they'll come in and say, yes, I want the premium where, you know, it could be 800, 900, 1,000, you know, whatever it is, they're saying that cool. Well, I want to buy a 110 strike price to say that Apple will not come down here. And as long as it stayed above this, up to their expiration, let's say they bought a July or they sold a July expiration of a 110 or 115 put, then essentially as long as that goes up and then it expires in July, they're making money, they get the premium, right? So at this point, if they had an expiration in July that they bought in March, we made it here, they made money. I'm sure they got a little scared right here, but as soon as it bounced back, they're like, cool, I get the premium. Once it actually expires, you get the premium. Okay. So, and essentially why I'm going over this is not because I recommend it to people, but essentially it's saying that, hell, if you're looking for something that bottomed out, these are the stocks that literally people are willing to lose money on to say that they're going back up. Okay. So
and what tab? That was the options tab. What was the other tab? Which tab are you on right now?
So there's most active options is what's basically on my bookmark. So most active options is going to essentially tell you where all the volume is. Okay, so it's actually done by options volume, but you can also keep track of the put call ratio here. And I want to go over the put call ratio a little bit again too, but the naked puts is right here under advanced group.
Oh, got you. Okay, I see it. Got you.
So you can click on naked puts right here. Essentially, all of these are advanced strategies. Okay, so most options traders have only been approved for like level 1 and level 2, but debt and credit is level 3, and then level 4 is like super high risk, naked calls and puts. So this is like the last level of options trading you can reach once you have the experience, but it's because it's extremely high risk because you could lose all the money you invested. Plus you could actually end up spending more because if it goes against you, like I said, you have to actually exercise that option, therefore purchasing 100 shares of whatever it is that went the opposite direction of your call or your put.
Got you.
So, and just for anybody that's watching this recording, naked puts are basically bullish. Okay. So just because it's a put, the fact they're selling it though is what makes it bullish. Okay. Naked calls, this isn't the same, but naked calls is a bearish strategy. That means that you want the stock to fall because you sold a call. Okay. Now, when you purchase a naked put, you are saying that the stock will not fall below my strike price. Therefore, you are taking a bullish strategy. So any of these under naked puts, like I said, these are people that are willing to lose money on a bullish strategy. Essentially, what they're saying on Mara, it won't fall below 23, right? What they're saying here on AMC, it won't fall below 35. All right. And these people are willing to put money on this. And they're willing to basically lose money or have to buy the shares. So anything that comes under here is extremely bullish. So definitely keep an eye on this because it basically means that, like I said, people are willing to lose money on the fact that they're willing to sell naked puts. Okay. And so for the put call ratio, I want to make sure that people understand it's not always about going for the lowest and it's not always betting against the highest. Okay. You have to use these numbers to gauge your stock, right? If you know that Tao Education Group has reached a ceiling and the put call ratio is 1.17, by all means, buy a put, right? But if you trade Tao and you realize that it has fallen and the put call ratio is 1.17, that means that these have to be released, okay? So I don't want everybody to think that just because it's high means it's a bad thing, because sometimes Tesla will go high. And that essentially means that either the price has fallen or the price has gone too high, right? So it doesn't always mean that it's going to go down or it's going to go up. It's just these help you gauge the current sentiment. So if you have like in the case of Carnival, I think Carnival has actually fallen quite a bit, which is the explanation of a high put call ratio. Okay, so if the price has fallen and the put call ratio is high, at some point, this leverage has to sell. Okay, they have got to let go at some point. All right. But like I said, if Tesla's getting too high, right? Let's say Tesla goes to 700, then you're obviously going to see this number rise. Okay. But that's not always a signal to bet against Tesla, because what Tesla little fanatics will do will literally blow through puts sometimes. And then essentially they'll have to cover those puts. And when they cover, when you hear shorts have to cover, that essentially means that they have to buy the shares, which essentially just makes the price go up even further because somebody had to buy shares. Okay, so definitely keep track of these, but just because it's low or high is not a go or a stop, right? It just means that you need to understand where the price is for this asset. All right. But so back to the naked, but like, let's look at Mara, because obviously, yeah, see, and I chart everything. You can see that just about all of these, I probably got some type of charting, right? Whether it's old or new or, you know, but I'm always charting. So if I ever get in a trade here, I can only expect so much, right? So always chart, but let's look at Mara, considering that people are willing to buy or sell covered, or excuse me, naked puts. All right. So essentially what these people are saying is that, let's look back at this naked puts. So on Mara, this particular person, or 233 contracts, saying that it will not fall below 23. Okay. And currently the price is at 24. The Heikin-Ashi is looking really good. But we can see the super trend has a little bit of resistance. Now, if it breaks that resistance, we all know what happens next, right? And then essentially, what is this, 2560? You know, what is this line I have here? I mean, just about that. Let's see. Where is 2560? About right here. So yeah, you can see that this is right here because of these recent prices right here. So essentially, if it can break over this, or my line in general, which is, just say 26, if it can break over that, that comes back into a bullish trend, right? So always keep track of the naked puts. It hasn't been something that was common. I just had somebody really reach out and kind of give me a quick rundown of like income strategies. But in order to trade those naked calls and puts, you actually have to have the equity in your account to be credited against you, right? So anybody that's coming to purchase these contracts, they will be credited on their account the amount of actually having to purchase those particular shares. So in the case of AMC, if I'm correct, basically, if they purchase this contract, they have got to have $8,000 in their account. Because I believe that what it'll do is it'll say, okay, we're going to hold this money, or it may actually be your strike price. Excuse me. It's actually going to be your strike price. So what's going to happen here is that you're going to have $3,500 in your account in order to make this $830. Okay. So it's going to, as soon as you sell that contract, and let me see if it'll actually show you. Let's see. Make sure. Let's see. Make sure the option is man, I guess they won't let you see it on here, but essentially when you're selling a contract, let me open up my phone to show you. But when you're selling a contract, the loss is unlimited, okay? And your gain is only the premium, okay? So anybody that sells a contract can only gain the premium. And that's essentially why they're trading that particular thing, because it's an income strategy, right? Like if this person just happens to have 3,500 in their account and they just wanted to work for them, they don't have to trade. They don't have to do anything. They just have to assume that the price will continue to rise and it'll credit their account for 3,500, just so that if this doesn't work out and the price of AMC falls below 3,500, that they'll end up just, you know, having a loss of 3,500 basically. Or it's not really a loss, but it's a cost that you have to purchase at a loss, right? Because if the price goes below this, you still have to purchase the strike price. So essentially, like if the price goes to 30, right, you're still going to have to buy 100 shares at 3,500. Therefore, you're at a loss right when you had to purchase the shares. So I don't trade these at all. They are an advanced income strategy. However, I do use these to learn how to use a negative put strategy to create income. Yeah, nah, I'm good. But I use this page to help me understand where people are willing to put their money and who's extremely bullish on what, right? And what else did I want to go over? Cool. Let's go into, I discovered this on Tradingview too, alerts. Okay. So I have cheat code Algo. So this is a really cool little thing that Tradingview allows you to do. So let's go to Baba, because it's one of the only ones that I really set an alert on. Let me see if it'll show me what alerts I have. Oh, well, I'll just start here. Okay. So you can actually, and you can set it on what interval too. So you can say, well, I trade off the hour, or, let's say the hour, because I'm pretty aggressive on the hour. So if we know that these buy signals on the hour are strong, right? Like if I know, let me back this out. This smaller. Okay. So one, I know that this is my low support area. All right. So this is where I know I got all gas, no brakes for Alibaba. You drop below 200, I'm dumping the bank. Okay. Now, what you can do is say, okay, I trade on the hour, and let's say I'm waiting on a buy signal for Alibaba. So I can come in here and say, alert me. Let's see, and then you can even tell it which one you wanted to let you know. So for me, I want the cheat code algo, and I want a buy signal. Okay. So there are some other signals that are in cheat code as well, but I'm essentially just looking for a buy signal, right? So you can say only once, you can have it open-ended as well. Oh, you got to upgrade for that. But I could even put an expiration on this for like, let's say for Saturday. Cool. So notify on app, show pop up. Basically, it will let me know as soon as Alibaba hits a buy on the 1 hour. Okay. So I actually used this once, and I forgot to tell y'all about it. But because I'll just run on, and then when I get off the call, I'm like, dang, I forgot to tell them about this. So I wanted to make this a little bit of a priority. So this is crucial, okay? Because basically it's when what's really cool about this, when I actually got the alert, it comes with a message, y'all. It literally told me what the entry was, what the stop loss was, and then the take profit levels, right? Because that's essentially part of cheat code algo. But Tradingview, literally, if I ask for a buy signal and to be alerted on that, because running the social media for cheat code, everybody always asks me, well, can we get alerts for buy signals? And I was like, man, that's y'all asking for too much. Like, chill out. Like, we just gave you the sauce. So then I was like, well, let me see, because I see they have alerts, and I use alerts a lot in Webull. But this is pretty advanced. Now in Tradingview, I wouldn't recommend going to set a whole bunch of alerts, because I think there's like a limit to it. But yeah, this is crucial, because literally it was this one time that I received the actual buy signal, and I went and jumped in the trade, because I was like, this is the best go I could ask for. And then it was, like I said, when I got the message, it was cool that it was literally like, here's your entry, your stop loss, and all that good stuff. So I'm gonna actually leave this on and save that, because I want to know when Alibaba goes by on the hourly. But you can also set it on other indicators as well. So you can say when it's crossing a certain value or price. Also stochastics, or let's say I had my RSI on. You could say, hey, I want to know when it's oversold, right? And so this is super crucial. Let's see, less than, see what it does in here, stochastic. So yeah, I mainly just use this for the cheat code algo. I'm like, hey, just let me know when to buy. And like I said, it'll send you all the info under there as well. But that is crucial. Alerts are essential. Like I said, you don't have to trade every day. Just use alerts. That's how you trade. right? So what's cool on the mobile, these will actually show like lines, but on the desktop, it shows the alerts to the side. But my alerts, let's say for Bitcoin, let's see, oh, Bitcoin going on, what's that? Oh, wow, that joker just passed 35. That's bullish, baby. That's a long time coming too. But you can see that all my alerts are down here. So they're really around the support level, letting me know, okay, Bitcoin is down, Bitcoin is down, Bitcoin falling, Bitcoin is down. Okay, it's gone too far, right? So these alerts are crucial because it lets me know where to look and I don't have to look all the time, okay? So like I said too, when you're using these watch lists, like these indexes, like these are just ETFs that are either short. Oh, also too, while this is up here, I see a lot of people actually doing options on the VIX. I usually trade the SQQ when the market's falling. And I mean, you can make, like, if you catch it at the right time, you can make like, I don't know why the SQQQ isn't on here, but if you can, I made 200% one time on the SQQ just because I was like, all right, the market's overextended. But you can notice that I have alerts here on the VIX as well, because you need to know about this, okay? Anytime the VIX goes above 18, you need to get a little cautious, okay? Because you can see even what happened after 18. It just, like, my alert is right here, and look what, bah, right after that. And then just, this is extremely high volatility, okay? So the VIX is volatility, okay? When this goes high, the market is just, it's going all kinds of ways. We got stuff going up, we got stuff going down, we got folks fighting against it. And so always pay attention to the VIX. But like I said, I've noticed people trading this. So this is pretty cool because you don't have to depend on a certain stock. You know, I found it that if we just hone in on what we know, don't try to trade the whole market, okay? So let's say you solely trade Apple, all right? But Apple's to a point where you're like, well, dang, it could keep going, or damn, I don't know if it'll fall, but I don't want to risk that. And then I get blown through my put, right? Well, if you just feel as if the market's about to go down, you can literally buy a call in the VIX or the XQQ. I saw some really nice returns on the VIX because look at this. I mean, this thing jumped $7. That's a lot of money. Now your SQQ isn't going to move that much, but the premiums are so cheap. Like, I don't know what the premium cost is on her. I don't know. Oh, there's no, oh, what are they trading then? Let me see. They must be trading this CBOE. No, let me see. Y'all, they trading the VIX somewhere. Because I saw some people trading options for it. I'm gonna find that out. But still, you all need to watch the VIX, because essentially, like I said, that's going to let you know the actual volatility of the market. And when this is going down, that's good, right? Now, when it starts to go back up, you should get a little worried, but usually I keep this on a day chart because when it's in this downtrend, we're looking healthy, we're feeling free, we're good. But when this starts to rise, you need to start protecting investments, okay? Yeah, keeping up with these ETFs and also these indexes as well as futures, you know, because what's going on in futures, that's going to happen before the market, really giving us a gauge of how people feel before the market actually opens. And I'm glad this actually says Seeking Alpha, because if you do not have Seeking Alpha, you need it. Okay, Seeking Alpha is just great for news. What you can do is you can go into Seeking Alpha, and then you can let them, you can create a watch list in Seeking Alpha, and it will send you news based on what's in your watch list, right? And it's cool because there will be like analyst ratings and just like, well, here's 5 ETFs, or here's 5 stocks to do this, or and it'll let you know if your stock is in that group, or but Seeking Alpha is good. Benziga, I don't really use it that much, but I've heard Benziga Pro is really good, at least for fundamentals and stuff. But like I said, I'm not a fundamental trader, so I don't really look at balance sheets. I just trade technicals. But yeah, Seeking Alpha is great for news. But essentially, like I said, you all want to watch these things so that you're not trying to watch the whole market. Okay. If this is going down, I know that airlines are going down. Okay. I don't have to try to figure out what's going on here and what's going on there. I don't have to figure out if American Airlines is going up and Delta's going down, because it's not the case. Like if this is going down, then all of them are coming down, right? Because they're built into this. All right. So always, like if you're going to trade something, let's say for what you were talking about earlier, Peloton. So let's look at Peloton. Why ain't it coming up? Peloton. Okay, so what you can do is go under analysis and you can look at ETF weighting. And wow, it's got the heaviest weight in here. Now I wouldn't go for something like this because that's extremely weighted in favor of this. Like let's take a look at it. Like look at this chart and then look at this chart. Now what else is in here? Analysis, top 10 holdings. Okay, it doesn't have too much leverage for Peloton in here. Cool. So yeah, if you want to see if Peloton is going to work out, then follow what it's actually in the ETF. So anytime you all want to trade something, make sure you're looking at additional ETFs to make sure that the rest of that industry or sector or collection of holdings is also moving in your favor, right? Because if it's in these ETFs, and the ETF is going down, then most likely your stock isn't going to be that favorable as well. Now, if you catch the ETFs going up, then it's going to be in your favor to trade, right? But keep in mind that you need to find an ETF that actually has a good leverage of your stock in it. Let's see, analysis, ETF weighting, Renaissance IPO. Okay, let's ARK. This is a pretty popular one. RKW analysis, top 10 holdings. Where's Peloton here? Dang, it's still in on the top holdings. But essentially, like I said, if you can even you can see that even this direction was similar to that previous ETF we just got, right? So everything seems to be bouncing back up. Notice I have my Heikin-Ashi candles on too. I don't keep these on because like when I'm trading, I actually do this, okay? Because I like to see them. So when I trade Apple, I'm usually shorting Apple at open. Like it's just my strategy. Like it's like the only thing I even want to do now is short Apple at the open. But only when it's high. Like I wouldn't come short Apple right here. It's just not a good idea. But on Friday, I literally let it go up. I bought a put and that joker just flattened out and I sold. So if you break this down to 5 minutes, let's see, you can see what happened. So basically it went up. Okay, so basically the open was at 147. All right. That joker hit a high of 147.87. And I bought a put right here. And that joker within 5 minutes just pop, you know, and this was enough. I bought a lot of contracts though. I bought I bought one here and then I bought like 3 here. And then at this point I was like, give me 5 more. And at this point I had like 11 contracts and it just, wow. And I made like $300 in just a matter of time. Now I did have some puts at the open. And when they shot up, I sold them, which kind of like let go of some of the contracts. But then when I realized it was still going up, I was like, well, cool, I'll just buy more. I'm losing some of the profit that I had, but essentially if I buy more here, then I can catch this little fall, right? So essentially this is called scalping. You know, I'm not staying in this trade long. I didn't buy the trade or the put here and then expect for Apple to fall the next day. I watched it. So once it hit this level and it started to return, right? So one thing that I noticed too, were these were still green. So I didn't have too much time to waste because Heikin-Ashi is going to take all of this out. It don't matter if it's red, green, it's going to tell you the trend. Okay. So once I bought this put and I'm down here and I noticed that these are still green, I was like, cool, bye, you know, because that tells me, and essentially I could have turned around and bought a call here and just rode it out for the day. But yeah, I'm just not that kind of trader anymore. I just take money and I'm done for the day. I win and I walk away, right? It's like being at the casino and you up $1,000 and you're like, well, dang, now I can win even more money if I put it in there. It's like, that ain't how it works. You know what I mean? If you win $1,000, you need to get up and you need to go home. Okay. And you need to save that $1,000. And maybe if you want to go back to the casino, only take 100 and see what you can do with it. Okay. The problem is, and a lot of times where I even have to do that to myself, when I reach a certain point in my account, I go ahead and transfer the money to my Roth IRA. Because essentially, if I have the money to risk, I'm going to risk it, right? There is not too much self-control in my trading. I'm working on it, but I know that there are certain measures I have to take to protect my own investments. All right. So if I understand that my options account doesn't need a certain amount, I'm going to take it out, because if it's in there, I'm going to risk it. So always like set rules when you're trading. Okay. If you've taken a loss, step away from the market. All right. Because what happens is people will take a loss and then try to come back to the market aggressively to get it back. And then you just end up diving yourself in a deeper hole. Okay. But really, this kind of trade was really aggressive. I was just kind of bored, but I started to realize what happens to Apple when it's kind of high and then it comes low. I can at least catch an opportunity for this put at the open. But Apple's getting a little dangerous these days. But I imagine on Monday, I might do another put in the morning, just like a 5-minute play and call it a day. But always pay attention to what's happening in the pre-market as well. Like I told you, if it's high, it's going to come back down. And if it comes back down, it does have the opportunity to shoot back up. Now, if you're in pre-market and that joker just going up, it's coming down. Because everybody that's watching in Robinhood is like, oh my God, I'm making money. I got to sell it open. You know, because they don't really even have the freedom that other traders have in like Webull, where we can trade in extended hours. Like I can, if Apple up right here and this is where I want to lead the boat, I can leave it. If you have Robinhood, you're stuck. You know, you just, if Apple decided to fall, you can't get out until Robinhood lets you, right? So like I said, anytime these pre-markets are happening, just know that if it's going down, it has the opportunity to bounce back up. But if it's going up, most likely it's going to shoot back down, right? But like I said, these are just regular candles. Okay, so usually I watch this to have all of my indicators here, so I can switch this to whatever I want to look at, right? And my indicators are still here to help me. But also I have other time frames available so that when I'm trading, I'm looking at all time intervals, right? Because if it's bullish on the hourly and bullish on the 15 minutes, I got no business holding a put through the rest of the day. Okay. Now, if you bought a call for Apple and you got this super trend support, you got super trend right here, and you see it came down here and the candles are still red on Heikin-Ashi. Like I said, I have the Heikin-Ashi over here as well. Oh, no, they're not. But here it is. But yeah, if you got a Heikin-Ashi and it's still saying a bullish trend, by all means, hold your call, right? Until you see a red candle or a consecutive row of red candles. I've heard of people using 30-minute too. I don't use it as much, but you know, whatever floats your boat. Everybody uses different intervals. To me, I like to see as many as possible. And then when I'm about to buy the option, I got 1 minute right here because I'm trying to get the best price possible. Okay, because this 1 minute, I would never use it for trading, but I want the perfect entry, right? And this 1 minute is going to give you the perfect entry for your options. All right. So like I said, I do not trade 1 minute. I don't chart 1 minute. 1 minute is just letting me know that, hey, if this has gone too high or this is too low. Right. And so I want to be able to make sure that I'm getting in at the exact point that I'm comfortable, because these types of moves can be, you know, cents and premiums, which equals dollars. Right. So if I'm not getting in at the right time, then I'm already down. So it's all about precision. And when you're buying options, don't go heavy, buy one contract. You'll see me post a lot of times that I just bought one contract. And that's because that I bought it, basically hoping that if it did fall or I'm losing money, then I have enough opportunity to leverage myself a better price. Okay. But if I go in and I'm like, this is the right time, I buy 5 contracts. Well, shit. I mean, I really don't have too much room to give myself an opportunity to leverage myself out, right? Because if I buy 5 contracts from the jump and then it starts to go sideways or backwards against me, then I have to buy just as many contracts to get myself out of the hole. And a lot of times people don't have the equity to do that. Okay. So if I buy 1 contract and that joker takes off in my direction, I'm not buying more. I'm just in it for 1. I'm not greedy. Right. But if I buy 1 contract, let's say, you buy a call here because you think Apple's going to take off. Well, then it retraces. Well, here's an opportunity to buy 5 more at a better price. Right. And then take off. But if Apple, let's say I bought the call here and Apple takes off, I'm not buying more. That was my entry. I'm good to go. I'm going to take my 1 little Apple contract call and I'm going to be happy and going about my day. Right. So don't be too aggressive on your entry, because what you want to do, if you buy 1 contract and it loses, you can either cut it or you can buy more. However confident you feel about it, you have the opportunity to buy more. Like I said, when Apple opened up, you notice it didn't drop any lower than this on the open. So what I did was I bought like a contract kind of like right here. And I think it kind of pulled, or actually, yeah, it went higher. And I'm losing money as this thing goes up. And I was kind of selling contracts. I was like, maybe I need to just get out of this, because what I didn't want to happen is what happened the day before. And I didn't buy a put on this day, but it just took off. Didn't even really come down, just took off, right? And you don't want to get caught up in that unless you got a call, I guess. But want to just basically come in and say, well, I think Apple's going to fall this morning. Cool, buy 1 contract. And then as Apple doesn't fall, buy more, right? If you're feeling that confident. But don't buy more if you're hoping, because hope ain't a strategy, right? If I hope it goes down from here, no. I just know Apple is just a little out of its range for right now. And I don't see anybody buying at this price. What is Ethereum doing? Up 4%. So let's take a look at that. What's going on with crypto? How is everything blowing back? Perfect. Because I so bought. And I was like, man, I'm just going to hold. At this point, I bought at these types of prices. And I just said, you know what? You go down, I go with you. But I'm glad to see it's going back up. But this is the alert that I received, right? To let me know that, hey, we're back to a position that's a bullish trend. And I set this price low right here to let me know when it was falling below these points, right? And you can notice that it literally hit this same level and retraced, right? Broke over that level, came right back, and then fell on down to these levels where I got triggered. And this is where I bought, right? So I was like, if you fall below here, just take me with you. I don't mind, because I'll probably buy more. And so I set these alerts. And then, like I said, if I enter here and I got an alert here, well, let me know if you fall again, right? Because anytime you enter a position, make sure that if you're not setting an actual stop loss, you at least need to be alerted. Okay, so if I bought at 1,700, let me know if this joker falls another 100. Okay, and this alert did not go off, which is good. And this alert tells me that we're moving back up, right? So please, folks, set alerts. It's super easy. You can literally right click on this, create an alert, right? And like I said, don't create an alert without a note. Okay. So if I want to know, okay, the price above 23.89 bullish, whatever it is that you want to do, or let's say you entered a trade. Let's say, I bought here, which I did, and I set this alert, right? I can say, hey, if it comes down here, create an alert for 15.94, price below, Ethereum is falling. Buy. You know what I'm saying? So it's really that easy, right? So when I get this alert, it's like, hey, Ethereum's price is below 15.94, ETH is falling. Buy. Okay. Because what you don't want to, because when I first started setting alerts, I was just getting a whole bunch of alerts that said prices, and I don't know what they mean. So it's like, how do I know when to act? How do I know? Because these aren't necessarily ones that I'm acting on. This is ones that I want to be known aware that it is falling. This is letting me know that these need to be put on watch. Okay. But, and as you can see, I didn't even have a note for these because this was before I really just realized it needed to be a note in there. So if, let's go to Alibaba. If if Alibaba on the day chart, lowest is 100, 200, right? I can literally set an alert down here. I don't know if I put it in here. Let me see, price below. Well, I need to update this. Well, that's 201. That ain't good enough. But I can literally set an alert that says right here on this line, if Alibaba goes too far, I want this, right? Price below. You can also do percentages. Let's say you don't know a particular price. You can also say percentage change. And I usually do have a percentage change on all of them already, at least the ones I trade. So I want to know if it's below 5%, right? Because something drops 5%. Now, don't always put 5% because sometimes it won't drop 5% a day. But I probably put it at 4 to give me a heads up that something is substantially falling, right? So keep in mind what percentages that you're putting in here, because you want to gauge, like this was negative 3.51% in a day. So 4% is pretty healthy because that's letting me know that it's fallen substantially to give me a good position, right? And I always want to catch falling stocks anyway. So you can always do percentage change. And that's not going to be any sort of placement on the chart. These are just for prices, but you can, like I said, you can create alerts for price, volume. Now, the only reason you would use volume is if, let's go under Baba. And let's say Alibaba's volume. Oh, this ain't Alibaba. Okay, so Alibaba's volume is at, average volume is at 14. Dang, it did 25 on Friday. What's up? People buying or what? Hold on. Order flow. Okay, they selling. Dang, G, pop back for the kid. But the average volume is 14 million. Okay, so if you want to be alerted when it's starting to go over that, you would say create an alert, volume above. Now, this is in thousands. Okay, so what we want to do is 14,000, or you could even say 13 or 12. You know, I want to know if this goes off early in the day, then I know that there's a high volume at the beginning of the day, right? Or you can take a percentage of this. You can say that, okay, you know, let's break this down in 3 sections, right? So you can say this is just 15. Well, if I set it at 5,000, that means that at 5 million, it'll alert me. Now, if I get this alert early, then that means that we're on the way to a higher volume than normal, right? But if you just want the volume that's already there, you can say 14,000 and it'll alert you to let you know that, hey, Baba's volume is over the average right now. You need to be looking at this, right? I use this once, but then it just kind of goes off all the time just because most likely these numbers are hit. But you can even stretch it over that. Like, so if the average volume is 14, you can say, well, let me know if we hit 16, right? Because that'll let me know that we really pushing some high numbers. Okay, so definitely use alerts. They're crucial from the alerts that are in Tradingview. And let me put this on the trade manager. Cheat code is pretty legit too, by the way. Once this trade manager comes, oh, well, it's telling me that we about to be, oh, this down. We're going down. Oof, oof, oof. But yeah, this is on 1 hour though. I like using the day chart for the trade management. Let's see what it's saying on this. Okay, cool. So you can see why the stop loss is here. And you can see why the entry is here, right? I even have these lines that's like, basically, this is like my buy zone. Like, this is like, okay, you've gone too far. Okay, now you've gone really too far and I'm willing to buy anywhere in here, okay? But obviously the day chart is showing bullish. And I just feel like if this price is bullish, but I'm gonna be patient. But definitely use Tradingview for the alerts, Webull as well. That way you're not always trying to look and be like, oh, okay, is today the day for JD? you know, it's going to alert you if it is, right? I got alerts down here. If JD doesn't come below this price or near these prices, I'm not going to get alerted, which means that I got no business trading, right? Unless I'm alerted. All right. So keep those things in mind. Also, once you enter a position, go ahead and try to find where these prices reverse, right? So once you enter a position, make sure that you're also setting an alert, say at a moving average or at super trend. Like let's say that I entered a long position in JD. Well, if I'm holding it, I want to be like, hey, create an alert, prices above, target reached, you know, take profits. I don't think you can write that much, but you know, you can say profit target reached. It won't even let me type the D, but you can just type this stuff in. That way you're like, oh man, I got my call option over in JD. It just hit 77. I need to go close out that contract, right? That way you're not having to watch the trade, right? If you're confident about the trade, let it do its thing. Set a stop loss and walk away. That's what I've been doing recently. I'll just enter a trade and set a stop loss. If it knocks me out, it knocks me out. But if that joint keeps going, I'm going to have an alert that lets me know, okay, it just reached this point, right? So definitely keep an eye on the alerts. They're going to help you trade with a lot less work, busy work anyway. But if you're not trading, please chart. You notice that on all of these that I've clicked on, especially anything that's in my my like go-to watch list, I'm going to have it traded. I mean, charted, you know, so I don't think I probably charted AMC for sure. But anything you're trading, make sure you're coming in and charting it. All right. Some of these I'm not trading, like Uber, I charted this. Yeah, but not recently. But definitely go in and do this charting or you're trading blindly. All right. And charting is going to help you really find these areas of resistance because even from old, right, I can see that even if Uber ran up, it's going to catch some resistance here at this blue line that I put. But notice what my super trend is doing. Is literally telling me the exact thing. And this super trend was the one like this blue line, right? This blue line has been here because I was trading it over here, right? Boom, 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 hit this line, hit this line, hit this line, went up, came back to this line. They noticed it was about to pass this line and they let it go past the line. It came back to the line, got rejected, broke through the line, came back under the line. Okay. So this is when you're charting, it's not coincidence. Okay, it lets you know why it's there, what's happening around that line, and it's important for you all to chart because if I didn't have super trend, I still have this line here, right? So even without the super trend, I know that this is going to be my resistance, right? And if you need help, use super trend, right? I mean, super trend's great. I used it. I still use it, especially if like I'm actively in a trade, I'll use super trend because they do respect that. Like if I see a resistance being set up from super trend, notice it ain't gonna break that. And if it does, we're in a bullish trend, right? But if my super trend drops with the price, well, that's just saying your ceiling just got lowered. So you got to break through 50 at this point, right? To become bullish again. All right, so definitely chart, and please set alerts. It'll save you a lot of time. And it'll just help you when you get an alert for a trade. You can come in and be like, oh, okay, it's right here. I mean, this isn't a good example because I really haven't charted the lows or anything, but let's say the price is falling and you've already set, you know, a couple lines down here to tell you when or where it could potentially reverse. Then when it's coming down here, you're like, okay, cool. I feel like I could buy here. Right? Because you notice that it's been rejected from down here. It got some support at 43. So if we're at 44 and getting down here, you can know that at some point in this area, we're going to catch a reversal. Not sure if it'll last, but I know I'm willing to make the money on this. Right? And then you already know that you're going to get rejected the closer you get to these prices. So if you're feeling really aggressive, hold it if it's a long-term contract. But if it's a short weekly or something like that, go ahead and take profits because we realize you only got so much further to go. And then this is a doji. All right. So a doji just basically means it's like a flat top, like a spinning top almost. Right. So definitely this lets you know that people are indifferent about the price and it just kind of flatlined. So when you see these are definitely reversal type dojis. This is letting you know that, oop, we lost gas. Okay, turn around, right? So always pay attention to the candles as well. Just it is not about being the candle Bible. Just make yourself familiar with what's going on, because it'll definitely help you understand why the price is moving in a certain direction. And if you don't understand those candles, go to Heikin-Ashi, because this is just going to tell you straight up the trend. It's not going to be red, green. Like, look at this. This is going all kinds of crazy red, green, but the overall trend is bullish, right? So that's why I say I definitely like seeing the Heikin-Ashi occasionally, because it lets me know that, heck, if I'm still green, I'm good to go, right? So if I start to see red and then the red gets larger, I'm out, right? Because the larger these get, the worse it's going to go, right? But once this starts to thin out and then change colors, you're getting back to bullish. So these kind of help you spot the trend if you're not able to do that with the candles. And it'll take out all the noise from the regular candles of going red and green. And it'll just confirm the actual trend for you. So, all right, I've gone on for quite a long time. So I want to make sure that everybody understands all of that. And if anybody has any questions. Oh, that's good. I want to make sure y'all are understanding this now. So if y'all got questions, please don't be afraid to ask. I'm here to help. I'm going to go ahead and stop this recording.